We've been talking about Illuvium a lot on this channel recently, and we've been talking about it quite a lot in the Discord group because this is something that was brought to my attention because of this pattern here. This was one of my top 5 altcoin picks, and this was before the bull retail rally even started. This was going back about 3 weeks. So go back and watch this video because Illuvium was one of my top picks. And the reason why, this is the weekly time frame, is what I call the pothole effect. And what happens is you hold a strong support base, and when you break through, guys, what do people do when you're holding a strong support base on a higher time frame? They put the stop losses below that base, understanding that if it breaks below there, they want to be out with the limited amount of capital possible. That's the smart money. What happens is it sweeps the stop losses and creates an acceleration to the downside. And then we hit another base. And this is where I got interested because we created one thing. We created a higher time frame bullish divergence, and that carries a lot of weight. So that was why Illuvium was one of my top picks a few weeks ago. And since then, that's what's happened. That was around $10. We've had a surge to the upside since then, around $10 of to the top, to the peak, 130%, to where price action is now, 74%. So what we're going to do is we're going to measure the swings to the upside, see what Fibonacci numbers were respected, see how this thing's likely to pull back, which will give us buy zones. So what we're going to do is we're going to add in the fibs, we're going to add in our indicators, we're going to look at how far this pullback can be, and then we're going to look how high the next extension could be on Illuvium. We are talking smaller swings on this one. We're talking what's going to happen in the short term for this 5-wave move before we get a correction, another push to the upside, because we went over the higher time frame bias, we went on the weekly time frame, and just to put it into perspective, this was the area, this was the base that held for such a long period of time until we dropped through. This is the pothole effect, and look how significant this is now. That tiny move there is over 100%. So getting back to these levels, 156.13, even back to these levels, 106. Is it possible? It is possible. Will it happen? I haven't got a clue, guys. All we can look at is time in the market as well as where we are during that time in the market to get projections of swings for the near term, to be able to understand exactly how fast this thing swings, how hard this thing swings, and how much it needs to get there within a specific amount of time based on our macro analysis, which is Bitcoin, which is Ethereum, which is the dollar, which is all of these different things collectively that we look at, total 3, and paint a bigger picture to understand exactly where we are in the risk curve, how long we've got left, whether things are overbought, whether things are oversold, whether the leverage is too high in the market. So it is a big picture. It's like a big web as far as the markets are concerned. It's not just within crypto, it's within macro, it's within all sorts of things. The more you delve into it, the more it'll blow your mind. So what I'm saying is that level looks insignificant. What's going to happen in the short term? What do? We stick in our fib-based extension to find out how big this wave was, because wave 3 can't be bigger than wave 1. We say it time and time again. So if we measure that, doesn't look like it's bigger. Sorry, it doesn't look like it's smaller. 2 there, swing low, 2 swing high, back down to swing low. You could see this swing was actually a 1.618. Look where this got rejected, 1618. So you've got a 1618 swing. What's that telling us? The pullback could be even bigger because this swing is a big swing. So we understand that swing 3 is bigger than swing 1. That's a tick. So we're intact. We're pulling back for swing 4, and then we want an extension for swing 5. So how far are we going to pull back? Firstly, let's stick the indicators up. You can see we're overbought here. We were overbought at resistance. We were overbought at the 1618. We were overbought here. We needed to cool off. So we need to cool off, and now we're looking for a retracement. How far is this thing likely to pull back? So we're using our retracement tool here from this recent swing low all the way to the swing high. And we're going to look for sticking points. First area in a strong trend is going to be a 38.2% retracement. When you get a 1.618 extension of the first swing, expect to pull back to at least the 61.8% retracement. The 61.8% retracement is sat at $16.81. So this creates my first level of support. So there's the first level of support, 1681. So you've got 1681 to fall back on. You've got your indicator, which is falling back now. Aim of the game is, as the indicator falls back, you want to be holding the higher low. So we're likely to come back to the 618. Is it going to come back below the 618? Right. What we're going to do is we're going to look left to find out, and you're going to tell me whether you think we're likely to pull back to the 786 or whether you think we're likely to hold the 618. So there's the 786. 786 is sat at $14.68. Now we look left at the 786. Clues look left at the 786. That is a major level of resistance, which you would expect to flip as support. Now, double confluence. We talk about double confluence. For those that are new to the channel, what is double confluence? It's where two areas of resistance or two areas of support match up together, which carries more weight behind it. Why does it carry more weight behind it? If you think of traders, you think of investors, you think of retail, all people have different strategies. All of them are looking at different things. You've got people that are coming back and waiting for a test of a 200 moving average. They will put their buy order in at the 200 moving average. You've got the 200 moving average traders, let's call them. You've got the Fibonacci retracement traders that are looking for a 786, knowing that this was structure resistance, and then they're expecting it to pull back as support. So you've got the Fibonacci traders, duplicate that. You've got the Fibonacci traders. So you've got the Fib traders, you've got the 618 traders. Sorry, you've got the Fib traders, the 786 ones, because that coincides with the previous resistance. You've got the 200 moving average traders. And if you've got two lots of traders that are putting buy orders in exactly the same place, that creates double confluence, and that projects the buy orders forward, understanding that they've got momentum. The bulls have got momentum because you're putting in a higher low. The bulls have got momentum because you've got double confluence. You're holding a strong support. Indicators have come back, and then you can bring in another trader. Who's that trader? It's the trader that's trading indicators, waiting for this thing to come oversold. So as this thing comes oversold and you come back to the 78.6, you've got one, you've got two, you've got three areas of confluence. You've got the stochastic RSI coming back. You've got the 200 moving average. You've got the 78.6% retracement traders. And guess what? People do RS flips. What is an RS flip? That was resistance, that would flip support. So what we're going to do, we're going to add in another one. We're going to add in the resistance support traders, understanding that that was previous resistance. This area needs to come back, and this area needs to be reclaimed. And if this area is reclaimed, you've got these four guys and girls here all buying at the same area, ready to push price forward. So if we're at the 786, and this is all hypothetical now because we need to put in a higher low. We haven't put in a higher low, but hypothetically, if we do put in a higher low at this 78.6, this is $15, guys, around about $15. What's $15? It's a psychological round number. Let's stick the retail in there as well. Let's stick the retail traders in there as well, because we know $15 is a psychological round number. So you've got the retail traders buying at $15. When you hit $15, you are likely to see an acceleration. You are likely to see a wick to the upside. And some of these buy orders might even not get filled. It might be quick, fast, but where is it going to go next? This is where we put our trend-based fib extension in, projecting and understanding that we're likely to come back to this 78.6. So this is hypothetical, back to the 78.6. Then we're looking for extensions of at least a 1-to-1. $28.11. You've got a 1272, 3164. You've got your big 1618, 3623. That 1618 coincides with this big level that we're talking about. This was the big support base. This was the big support base. This was the pothole effect. That is going to be your next rejection point. That's the 1618, and that's when we get the next big swing. Hypothetically, if we do pull back to the 786. When you're looking at the chart, guys, it's looking likely that that's exactly the area that we're going to pull back to. But let's monitor this. Let's look. Let's find out. And while we're doing this, let me tell you, I am dropping a portfolio, a $1,000 portfolio. If I had $1,000 today, there's a lot of guys that are new to crypto. If I had $1,000 today, how would I allocate that as a well-diversified portfolio? I'm going to be doing the video today. I'm going to be dropping that tomorrow. So make sure you subscribe, hit the notification bell. See you in the next one.